Keep it going now. Markets, rates, and more with Ed Yardeni, president of Yardeni Research. And half the time when we have you on, Ed, whatever the overreaction of the day is, you kind of bring us back to the mean. And I guess you'll probably do that with some calm today as well. We may not get seven rate. You feeling that? We may not get 7 rate cuts, but you think inflation is trending lower? Maybe it'll be uneven, and the economy is doing pretty well.
Yes.
But so we're somewhere in the middle between panicking on either side.
Well, Joe, you covered everything I was going to say.
Tell
look,
me.
I think inflation is continuing to come down. The CPI, both core and headline, excluding shelter, is around 2% right now, and that's on a year-over-year basis. There tends to be an effort by economists to microanalyze the inflation numbers and looking at auto insurance and so on. And the fact is the Fed really has to focus on the overall inflation rate. They can't control individual components. And the overall inflation rate is still moderating. The economy's great. The labor market is great. I know some people just, I get people disagreeing with me on that, but that's the macroeconomic data. It looks just fine. And so from the Fed's point of view, I've believed their story. They said they were going to cut by 2 to 3 times this year, not by 5 to 7. And I thought that they wouldn't do it in the first half of the year because the economy is doing fine. Why mess with success? Inflation is coming down. The economy's strong. The labor market's doing well. And now we've got the roaring 2020s in the stock market with led by NVIDIA.
So let's say that just to try to figure out whether there's things to worry about, I started worrying the opposite way, and that was, a strong economy is great as long as inflation's under control. But the minute the Fed starts worrying about the stop and start disaster of the 70s, that's in the back of their mind all the time. And maybe we're not headed for a recession until they get so nervous that they do cause one from thinking that they need to get down to 2%.
Right.
That maybe the economy never, it's not night follows day. There will be a recession. Maybe it's always a policy mistake. You don't think that they will make that mistake?
Well, recessions are usually caused in the past anyways by something breaking in the financial system. So you get a financial crisis, which then becomes a credit crunch, and that's what causes recessions. And so, yes, indeed, we had a financial crisis last year in March. I mean, we could have had a run on the banks, but the Fed came in so quickly with a liquidity facility that they averted a credit crunch and averted a recession. I think they've done a good job here, and I think I agree with them. There's absolutely no rush to lower interest rates. And while most economists have been very upset about a possibility of a recession or something significantly breaking, because after all, I mean, the Fed funds rate is up 525 basis points. I think the Fed has not only tightened, I think it's also normalized. Interest rates are back to normal. And the economy lived with these rates before. I think it could live with them again. I think it's actually healthy for the economy to have an interest rate that is good for investors in terms of risk-free investing and is good in terms of allocating capital.
Yeah, people forget that point, I think, Ed, that somehow we did normalize. The economy didn't fall off a cliff. If there is some type of break in the future, we've got some room to lower rates with dry powder. Money has a cost again, and assets are being priced more realistically, when rates are a little higher. So there's a lot of positive, a lot of positive things to do. So that makes you, in terms of the S&P for this year, would you be surprised if it performed like it did in 2023?
Well, I find myself now worrying about a melt-up. I like slow, civilized bull markets. I don't like stampedes. The problem with melt-ups is, by definition, they're followed by meltdowns. But for now, it's the roaring 2020s, as I said. It all really started on November 30th, 2022, when OpenAI introduced ChatGPT. AI has been around for a while, but suddenly just took off as an investment theme. Tremendous amount of money is being thrown at this. And I think some of that is going to pay off in better productivity. So again, that looks pretty good. 5,400 on the S&P. 5,400 on the S&P by year end is my target.
You like getting up and coming on, or next time do you just want me to just summarize what I know you're thinking? Because when were you at Hutton? That was the 70s, was that?
Yeah, we were there together.
A little
we
before
brothers.
me. I got there in '84,
Yeah.
but yeah. So I know what I can finish your sentences. You don't need to come on if you want me to.
No, we could do this together.
Okay.
Or travel the country.